What matters before tomorrow's open is not just whether the market opens red. It is whether the market gets forced to price more risk or gets a real diplomacy headline strong enough to slow that repricing. Last week, stocks rallied on hope. Now the weekend is pushing back. Hormuz risk is back, oil risk is back, and that matters because the market was already stretched coming into this. And that is why tomorrow could get ugly fast if there is no credible overnight progress. The market is vulnerable here because this is hitting at a bad time. On our PreTradeIt dashboard, SPY was at 710.14 and RSI was 73.6. That is a stretched market, not a relaxed one. So if oil stays hot and buyers hesitate, profit taking can accelerate quickly. And just quickly, all of this data is coming from the PreTradeIt dashboard. If you want these levels, signals, and risk context before the market opens, sign up and try PreTradeIt for free. Now here's the part bulls still care about. There is still a possible resolution path. There are signs that a second round of talks could still happen, but there is still no fully confirmed meeting date, and the core issues are not resolved yet. So the market does have something positive it can trade, but it is still trading possibility, not proof. That means tomorrow has two paths. If there is no real progress on second round talks, then the market likely focuses on oil, disruption, and inflation risk. If there is a credible headline with actual meeting dates or a real framework for talks, then that can calm things down fast and blunt the downside. Now let's talk levels. On the PreTradeIt dashboard, the first real pullback zone I would watch on SPY is 677.5 around the 20-day EMA, then 674.3 around the 50-day EMA. That is the first area where buyers need to show up if this is just a normal reset. But if that zone breaks, then this gets more serious. Because below that, the next bigger downside area is 657.3, with the 200-day EMA around 656.4. That would not look like a routine dip anymore. That would start to look like a deeper repricing of risk. And again, this is exactly why we built PreTradeIt. Not to chase headlines, but to see the structure, the risk, and the actual levels before the open. So if you want to track this properly, sign up and use PreTradeIt for free. Now, if we do get the pullback, what are the potential plays? For me, there are two different setups. Microsoft is the quality watch. If SPY pulls into that first support zone and starts stabilizing, Microsoft is the cleaner dip buy setup. Hood is the aggressive watch. If the market flushes and then finds support, Hood is the higher beta rebound setup. So the plan going into tomorrow is simple. Watch for actual second round meeting dates or real progress. Watch whether SPY holds that first downside zone. And if support holds, that is where the dip buy names start to matter. Tomorrow is not just about red or green. It is about whether the market gets a real diplomacy catalyst or whether it has to price the risk the hard way.